Good afternoon, Ken Jolliffe with BIS Commodities here in Cedar Rapids, Iowa with the rundown for the week of August 20th. Price activity for the week. We began the week out on a very strong note in the grains. A big upward push started Sunday night, rolled into Monday and Tuesday. By Tuesday afternoon, we had the soybean prices up about 86 3/4 cents over last Friday's close. Corn at that time was about 37 3/4 cents over the previous Friday's close. We did level off in the midweek. We saw a little bit of some commodity selling come into to the marketplace. Some technical selling came into it. We took the corn market back down to a near unchanged point. Brought the bean market back down to where we were trading just a shade over $17 in the November contract, only to see the strength in the beans come back by the end of the week. We closed here this afternoon on a strong note with beans. For the week, we do have beans up 86 3/4 cents over last Friday's close. Corn's only up 2 cents over last Friday's close. We'll discuss that a little bit here. When you take a look at the two different commodities, why is the corn market lagging behind beans? I think the biggest issue as we look at right now, you take a look at the export market of both of these particular commodities. The corn export market is virtually dead. Any business being done, still being done out of the Brazil ports on corn. Sales this week on export for corn was again, below 300,000 metric tons. We're lagging behind a year ago. Thus the fundamental side of the export market of corn, is probably the biggest reason for the lack of the corn to follow beans much higher this week. Now soybeans are a different issue. China continues to be a huge buyer of beans. The export sales here Thursday morning were a touch over 700,000 metric tons again. Also, that particular day, we saw some sales announced to China for both beans and bean oil. So we see their appetite continue to be there anytime the bean market is broke back. So that's the overall strength of the bean market here right now that I think if we move beans higher later, the corn market will eventually follow it, but those two have completely different animals to look at here currently on the fundamental side of things. Also this week we had the Pro Farmer Tour that began Monday. I think the social media side of this thing got everything going Monday too, as they began on the east side and the west side of the Corn Belt. The tweets, the emails, and everything naturally were showing yields of being down substantially from a year ago. Down somewhat from what they anticipated they were going to see, down from what the government was on their August report as they moved into the central part of the Corn Belt, particularly here into Iowa. The yields improved somewhat, but still naturally down from a year ago. The Pro Farmer Tour, which came out this afternoon now with their final numbers, they came out and showed us a 10.478 corn crop compared to the government's 10.779, here on August 12th. So they're down about 300 million from the government's number. Yield-wise, 120.25 versus 123.4 from the USDA here in earlier of August. Beans had a 2.600 crop. The government was 2.692, so we're down 92 million from the government's number. Yield was 34.8 versus a 36.1. So probably nothing really major is a surprise this afternoon seeing these numbers come out. A tad under the USDA's numbers that were put together basically August 1st. So consider them supportive numbers. We take a look at some of the issues of this week too. Crop ratings came out this week. And I really think the crop ratings are coming to the point to where they probably don't mean as much as naturally what they did a couple weeks ago or a couple months ago. You're coming to that point, where the corn is, what it's going to be. Beans are, slowly starting to turn in parts of the grain belt. So those ratings, even though they were somewhat steady for the week, Some of the trades thinking maybe we could be down a little bit this week because of the heat that's moved back into the production area, but that heat's only going to push us along now, and start some harvest activity. Corn harvest activity actually has began. We've got some stuff going on in the central and southern part of Illinois on some of the early corn coming in. As one would expect, yields are all over the place. You can hear some 60s, 80s, 100s, 120s, and 140s. So, as we move along probably into next week, we'll get a little bit better idea as far as, what they may be looking at there in that state as far as a better average. But it is moving along probably a lot quicker than people expect. I would not be surprised to see, as we come into next week or latter part of next week, for instance, when we give this report to you, that the corn harvest out in that part of the area could be as much as 20 to 25% done. So, cash markets were kind of a mixed bag. They were strong early this week. We did weaken them up naturally with the activity of Illinois, seeing some corn harvest here, and that the farmers are moving the across the scale stuff right into the cash market. It has weakened up the nearby basis some on the corn. The bean basis has held steady naturally with so far the lack of any harvest activity with there. The golf basis did back off a little bit in the beans. Some of that is we are sitting here now waiting for the harvest purchases from the foreign companies to kick in there. So weather-wise, going into the weekend, we've got a couple of storms we're looking at naturally. We've got one coming through the Caribbean right now that is aiming up into the west side of Florida, into possibly the Alabama, Mississippi area. That'll be watched by the trade to see how much moisture could possibly be tossed up into the southern part of the grain belt. The other storm being watched closely naturally is a typhoon that's out aiming towards the Chinese northeast territories, and these territories is where a lot of their corn and soybeans are grown at. So there's some concern there that this particular storm could damage some of their crops, so that'll be watched and focused on come Sunday night. Livestock-wise this week, naturally the cattle market had its ups and downs with the strength in the corn market. Cattle were down early, came back as the corn market backed off. Virtually an unchanged type market there. Hog market continues to suffer, through the liquidation phase we're going through. Hogs once again pushed down into new contract lows, on the futures months. So a weakness there. But overall, let's summarize the week this way. Grains continue to be well supported. We continue to be in a trading range in December corn, probably in that 780 downside area to the 849, 850 area that was posted right after the August report came out. Bean market, as the 86-cent type rally we saw today, probably any technical selling we would be well supported, in the 1680 area, 1680 to $17 area. End users will be there to to gobble up whatever pullback we could see, as they do need to cover physical commodities going into the harvest time frame. So, next week we'll see what these storms do. We'll evaluate the harvest activities in some parts of the Midwest, and see how the yields come out at that particular time. So, have a great weekend. We'll see you next week.